Hi, I'm Jaqueline P'ng and you're watching the HTV Evening Highlights. It's all about earnings today. First up, let's take a look at Felda Global Ventures. FGV's bottom line crashed with third quarter net loss widening by a whopping 263%. This after a slump in CPO prices battered its plantation segment. Its stock was also down, falling 0.5% to RM1.84. FGV's net loss plunged to RM33.92 million. That's despite higher revenue, which climbed 14% to RM4.5 billion. The group announced an interim dividend payment of 2 cents a share. For the 9 months to September, net profit dropped significantly to RM15.7 million. Cumulative revenue was just marginally higher at RM11.4 billion. FGV says it's not going to be easy moving forward, as the environment will remain challenging in view of the slowing down in China's economy, uncertain global financial markets and volatile foreign exchange rates. But it expects CPO prices to increase in the near term. And it says it will focus on improving margins by continuing its transformation plans to improve efficiencies. FGV is an agricultural and agri-commodities company. It is principally involved in the cultivation of palm oil, milling, refining and downstream processing of oils, fats and oleochemicals. Umno-linked Utusan Melayu also failed to stop its financial bleeding for yet another quarter. For the 3 months ended September, the Umno-linked broadsheet says its net loss widened by 45%. Its stock closed at 61 cents, down about 6%. Utusan says third quarter net loss stood at RM8.29 million. Revenue fell 18% to RM61 million. For the cumulative 9 months, the company's net loss widened to RM44.4 million. Revenue was down some 16% to RM181 million. Utusan says the third quarter's numbers were due to lower contribution from its publication, distribution and advertisement segment. And going forward, the weak consumer sentiment, thanks to the GST and the weak ringgit, is going to weigh on its margins. Utusan publishes 2 daily newspapers, Utusan Malaysia and Cosmo. It has been reporting losses since 2012. Maybank says third quarter net profit climbed 18% as net interest and Islamic banking income grew. At 5 p.m., its shares closed at 0.8% higher at RM8.48. For the quarter under review, Maybank's net profit rose to RM1.9 billion. Also supporting earnings growth was the higher net insurance premium as well as the sale of its Papua New Guinea operations. Revenue was about 27% higher. For the 9-month period, net profit were up 8% to RM5.2 billion. Revenue rose 13% to RM29.5 billion. Going forward, Maybank says it will continue to focus on balance sheet and liquidity management as it expands its regional presence. Group President and CEO Dato' Abdul Farid Alias says Maybank expects its financial performance for this fiscal year to be satisfactory. Maybank is Malaysia's largest bank by market cap and asset and the 4th largest lender in Southeast Asia. Its total asset stands at RM663 billion. Sime Darby's first quarter net earnings slumped by almost 35%. The company's bottom line was hit by weak commodity prices and volatile market conditions. Its shares fell after the announcement, closing at 0.1% lower at RM8.06. For the 3 months ended September, Sime Darby's net profit shrank to under RM330 million against $500 million a year ago. Revenue rose marginally by about half a percentage point to about RM10.2 billion. Sime Darby's president and group chief executive Tan Sri Muhammad Baki Saleh says the group's results reflect the difficult market environment faced across the divisions. He says weaker demand in consumer businesses and persistently low CPO and coal prices are to blame for the shrinking numbers. Oversupply concerns have kept a lid on CPO prices, not good news for earnings of companies the likes of Sime Darby. The conglomerate is involved in plantations, industrial products, motor vehicles, property and energy. It is the world's largest producer of certified sustainable palm oil and 3rd largest Caterpillar dealer. Telekom Malaysia's third quarter net earnings was squeezed by forex losses from borrowings and the consolidation of operational losses from its unit Packet One. Net profit was down 12% despite posting higher revenue. Its share price was also down by 0.15% at RM6.59. Net profit for the third quarter ended September fell to just under 167 million ringgit. Revenue rose 11%. For the cumulative 9 months, TM's net profit dipped by 17% to 508 million ringgit. Revenue inched up by about 6%. TM's Group CEO Tan Sri Zamzam Zairani Muhammad Isa says the third quarter was a mixed one amid the overall challenging environment. On its prospects, he says TM's outlook for the remaining months this fiscal year continues to remain positive. Unify is still enjoying a take-up while the development of TM's overall LTE network rollout is still on track. BIMB Research emailed us a note on TM's results. It says TM's 9 months normalized PATAMI of 591 million ringgit is in line with its estimates, despite making up only 65% of its full-year forecast. It expects the company to make up for the shortfall in the fourth quarter. The research house is retaining a buy call on the stock, target price 7 ringgit 70 sen. TM is Malaysia's leading integrated information and communication group. It has a market cap of about 25 billion ringgit. And that's all we have for today. I'm Jaqueline P'ng. Thank you for watching.